of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
All right. Come here, dude. Come here, dude. I got you. I got you. Let's say hi. Let's say hi to everybody. Yeah. I'll put you down, but you gotta give me a kiss. Yeah. Yeah. All right. A kitty crossing. Okay. Let's see. We touched a few minutes ago, Bitcoin touched its all-time high. It like touched it and then boop, it cut down just a little bit. I think it's likely you had people that were the 16 people that bought at the high were just like, I'm done. I'm out. I broke even. So I probably not a good move for them, but yeah. Let's see. Let me go and put it on my other screen. I'm going to throw the exchange up there. All right. Yeah. Okay, let's see what's going on. Yeah, he's a great temperament, but he destroys everything. Everything. Every plant, anything inside the house that's not made of metal gets decimated. Okay. So let's do some Q's and A's, and then, we'll address your questions. We'll get all that kind of stuff knocked out. I guess the only thing that I had on my mind that I wanted to address, did you guys read anything from ETH Denver? Well, I did. Let me go do this one thing. Let me grab an article. I think I sent it to myself. Usually when I see an article that really grinds my gears, I text it to myself. Let's see if I did this one. Well, this is one I'll talk about, but we're not going to talk about it just yet. But it is kind of preparing for the halving. No, the ETH Denver one that I read, I'll read you a quote. I posted it in the digital private client chat. But basically the quote was, the Ethereum developers and the developments they're making, they have no intention of reducing the fees. I'll read the quote exactly. I'll read it as they would have you hear it. Ethereum's biggest weakness, this is coming from them, has always been its transaction fees, which can make something as simple as a token swap cost upwards of $10. Bullshit. I've seen transactions that were several $100s. Ethereum's a goddamn nightmare. Anyway, this is a direct quote from ETH Denver, where they're supposed to be talking up all the greatest new goings-ons in Ethereum development. The direct quote is, Ethereum is not planning on bringing down fees for its users. And that's a reality that people need to understand, explained this guy. To circumvent its fee problems, Ethereum has gone full throttle on rollups, the layer 2 networks that settle transactions on the Ethereum chain but offer lower fees and higher speeds for users. Ethereum is king, said Poller. However, it is how we build around Ethereum with layer 2s to ZK fill in the blanks or whatever. To which I reply, fuck you, everybody in the Ethereum community that thinks it's okay to stick it to people with your fucking fees, and that's cool, and that your protocol is a piece of shit and it's fucking expensive, and that's okay. Go fuck yourself. Anyway, I don't think they're probably listening. They're probably not paying attention, but to have that kind of attitude towards it, it is a big FU to everybody in crypto. You realize every single one of us. It's the Ethereum developers that are sitting on tons of Ethereum that are rich, telling all of us to go fuck ourselves. And like, oh, just swallow it up. You just gonna have to deal with the high costs. What an arrogant piece of shit. I mean, and this is the thing. This isn't just one dude. It isn't just Kim. It's not Poller. It's the whole community. That whole community, they're good. I don't like Solana. It's the very worst of everything. It's thieves. It's crooks. It's fucking dirty VCs. It's dirty money. It's Sam Bankman-Fried. It is the absolute worst of everything. But I hope Solana flips Ethereum, because that would be the ultimate embarrassment, the ultimate go fuck yourself from the rest of the world, the ultimate double fingers to the lazy, fucking arrogant Ethereum community of rich developers and Vitalik's lazy, arrogant ass. Like, these dudes, they kind of stand on like this faux moral high ground. You're just going to have to get used to the fees. Fuck you, dude. Those fees are starting to get more expensive than bank fees. Like, yeah. And the thing, everybody's like, oh no, this new upgrade. The upgrade's not going to make anything better, man. It's not going to make anything better. It's just very frustrating. Yeah. I wish, like, Cardano, I would take an Algorand. Anything. Every one of these layer 1s is better. I know, right? Barry, I had to get an early one in. I thought I'd get an early one in, drop some F-bombs, see if we could clear the pipes out a little bit. Every time I start cussing, like 20 people disappear. Awesome. Anyway, yeah, you got fees for level 2s. Yeah. So Optimism, Matic, Polygon, Harmony 1, Arbitrum. Yeah, layer 2s. The thing is, that's a whole other, like, it's all new plumbing. Cardano would be better. Cosmos would be better. Algorand will be better. And I can't honestly say Solana would be better because the fees would be lower, but the thing will break. It'll keep breaking. I mean, that's one thing you can't get around with Solana, is that it will keep breaking, because those are just really poor. It's just built on really poor foundations, like just not good tech, just not good. And it's very corrupt. But at least the developers are not telling everyone to go stick it, to go shove it, have a stiff upper lip. F you, ETH Denver. What a bunch of douchebags. Anyway, so that's I just read that and I was like, these dickheads, man. What a bunch of jerks. Anyway, can you use the Optimism side of MetaMask the same as Ethereum? You can, listen, you can use all these networks for transactions, but you have to be careful, because addresses may or may not change. You have to be very careful about how you do it. You can send assets, across these other networks from exchange to exchange, let's say one exchange accepts Optimism, the other exchange accepts Optimism, you could send Ethereum through the Optimism network, you save some money. Problem is, if you get used to doing that and you accidentally fire off a transaction to a place that doesn't accept those layer 2s, you're screwed. Your money's stuck in hyperspace until that exchange gets around to opening up that network. So you could be in trouble. And I would just eat it. You know, Ethereum sucks, and it's still pretty much the only choice that you can send transactions everywhere. I'd much rather be using anything other than Ethereum and Solana. Just because, again, even if you forget about all the theft and greed and corruption and just like selling on investors and just the worst behavior in finance, which is Solana, you still have a network that moves really fast on very poor foundation. So even if you got rid of all of the worst parts of Solana, you're still stuck with the technology. That's a problem. And there is no argument for Solana other than, hey, it's made me money. Yeah, well, you can make money gambling. You can make money on PayPay coin or these other stupid ass meme coins, right? If you just want to gamble. But there is no actual fundamental technological argument. Solana it's garbage. It's just built on bad rails, poor design considerations by a weak ass team. But at least they're not telling their community to go F itself. Yeah, I mean, it is kind of like a meme token. It's kind of a meme coin platform, which that's fine. I mean, people that are gambling shouldn't be screwed when they enter the casino. They should be able to get in and out of the casino for free. If they want to light their money on fire, let them light their money on fire. People that are going to gamble are going to gamble. And every now and then one little worm will get through the cracks, and then he'll have some videos on YouTube about how he can teach you how to get rich trading meme coins, and he'll be doing it inside his car that's about to get repoed. So it is what it is. But yeah, to your original point, Raphael, I would just say be very careful if you're using layer 2s. I mean, I think it will get easier and easier. It's frustrating to me that we have to choose in a wallet, that you have to choose your network, choose your protocol, choose your, you shouldn't choose anything. I should be able to talk to my wallet and say, I want to send 20,000 XYZ coins over to my Coinbase address. And it should just look for the cheapest way to do it and do it. Like at this point in technology, why are wallets so bad, so sloppy? This is why I tell most people, just get a MetaMask wallet, get used to it. Don't change. You're going to get screwed on the fees. It is what it is, but it's still better than the traditional banking system. Have a MetaMask wallet, a couple of exchange accounts, and you can pretty much get everything. BZ, we don't need your support. We need your money. Go buy Bitcoin. No, let's see. Just got my fetch credited, sent it without a memo on Binance. Eesh. Yeah, be careful. I mean, Binance is good about Binance doesn't want to screw you over. Well, I say that. I think Binance, I used to always love Binance until they kicked all of us off, and I don't want to access it through a VPN. Binance is a really good exchange with good liquidity. Liquidity-wise and fees-wise, it's way better than Coinbase. The problem is, I mean, it's kind of run by quasi crooks. So they're not like thieves. They're just sleazy. That's why we used to call CZ Sleazy CZ. He didn't just accidentally get that name. He's a dirtbag. He's not a thief, but he's a dirtbag. And those guys will beat you up through not necessarily through malicious behavior, but through kind of, sketchy side deals, weird collaborations, pumping certain projects and then realizing it's, oh crap, this is garbage, and then trying to erase tweets and all that. I mean, CZ is a great he's a great entrepreneur, but he's kind of a piece of shit. He's kind of a piece of shit. So you got to be careful. But he's not trying to steal from you. He's just trying to do what's good. He's trying to line his pockets, right? He's just trying to get good. He's kind of like the Winklevoss twins. The Winklevoss twins don't want to steal from you, not in an obvious way. What they want to do is they want to build the market up and use you as their exit liquidity. Gemini, they can say whatever they want. Gemini Exchange was built so that those two assholes can sell picks and shovels and use you as their exit liquidity. Good for them. They've never had an original idea in their head. But it is what it is. All right. Okay, let me see if I missed any questions. Let's see. What's thoughts on Quick Swap? I've been reading a lot about it. I don't know, man. I don't have any thoughts on Quick Swap, Howard. You read about all these random ass projects. I don't read about all this shit. I follow the top 100 or so projects, barely. And there's 74 new things every day. And my worry is, oh, yeah, Quick Swap is awesome. I'm using it. Oh, one day it's just gone. Oh, and all my shit's gone. Like, everything looked good at FTX until all your shit was gone. Everything looked good at Celsius and at 3 Arrows and with Luna. It didn't look good with Luna. But I mean, and those were major giant things. So these like Johnny come lately, fly by night projects. Oh, what do you mean top project? You think Quick Swap is going to be a $10 billion asset? Come on, buddy. Wake up. If you're using this tech and you don't know what's behind it, and I certainly don't know what code is behind these things, it might be a quick swap, or it might just be quick, your shit's gone. Man, look how low the fees are. For less than $4 a transaction, they took all my shit. Well done. Well done, sir. So, I don't know, man. Stick with the stalwarts. Well, buddy, if you like it, you use it. I would just, you got to kind of stick with the winners on this. And yeah, I think that's kind of what the Ethereum, I don't know if everybody's their exit liquidity. I think in some perverse way, the Ethereum community thinks they're going to be the layer one forever. And while I don't think that's the case, I think they'll be here forever to some extent. I don't think they'll be the layer one forever. I think at some point, enough is enough. And when some of the big players finally realize what a catastrophe it is, and it won't be yet, by the way, they're going to milk the ETF. They're going to squeeze every last dime out of grandma. And then they're going to go, wait. Ethereum's no good for regular people. Then they're going to get crypto woke, and they're going to start petitioning for the man, the man on the street. This is bullcrap. These fees are ridiculous. They're going to be on our side. We need to make a change. And then the change will be, and it's going to be whoever's got the best dirty little lobbyist back alley bullshit deal with them. And, look at the protocols that do dirty deals. You hope it's a good one, but what's the likelihood of that? But on the other side of it too, I think they'll go push a smaller project. So I think first they'll push layer 2s like Matic and Optimism, and you probably get some nice returns there. And then they'll be done with Ethereum, period. They'll just say Ethereum is just too broken. It's too broken. Or someone will come out with a wallet, or MetaMask will upgrade a wallet and just make the wallet like a really smart wallet, so that we don't have to do all this piddly bullshit every time we try to send a transaction. It'll just be simple. Simple. I don't know why all this crap is so complex. It doesn't make any sense. At this point, it doesn't make any sense. So who knows? Maybe they'll feel compelled to step up the game here in June when Apple goes full AI on everyone. I guess that's what the word on the street is that that's when they're unveiling their new AI initiative in June. So fingers crossed that June doesn't suck. Let's see. Am I treating BTC as a trade or an investment? I'm treating Bitcoin as an investment. For me, Bitcoin is just like a savings account. It's just that I had some Bitcoin, it went way up, and part of that Bitcoin was not meant to be used for Bitcoin. It was meant to be staying in cash. So I think when Bitcoin gets to 100K sometime this year, okay, then I would probably take that portion of it out that was never intended to be Bitcoin. It was just kind of riding out the having hype and enthusiasm. I mean, again, we touched the all-time high a few minutes ago, and then it got beat up. Matter of fact, let's go look. Oh shit, it sold off hard. Look at that. See, it touched it. 68.9, almost 70K. No, almost 69. And then bang, bang, bang. Ouch. Kick in the newts. And then Ethereum was actually over 3,800 in it. So basically when, again, it's the same story. Cardano always gets its ass kicked. It's the same story. When Bitcoin drops, everything drops. See that little arrow there? You go over here, you look at Ethereum. Oh, no. Then you go over here, look at Cardano. This is going to all look similar. Oh, no. You guys see you see why we draw the parallel between Bitcoin as the ocean and all of the assets of the boats. Optimism is doing fine, but it even probably took a little bit of a hit. Let's see. Yeah, it took a little bump, but then people were like, oh, yeah, well, that's not Bitcoin. So, yeah, Bitcoin was it. I guess it technically touched its all-time high this morning, and then it was a little sell-off. But on the other side of it, go back to that same chart and remember that last Monday we were at 51,000. Let's go back 7 days. So, yeah, we were way down here. Let's see. Oh, we got to go back. We got to go a little longer so we can get the full Monty. Here's where we were a week and 1 day ago, 51,000. So this is not terrible progress. 51 to 65,000 is not terrible. Yeah. So in perspective, it's not a big deal. But yeah, I would probably be always adding a little bit of Bitcoin because it is kind of a savings account. If you think governments are sketchy and you don't believe in them and you think that they essentially want to steal from you, then Bitcoin makes a lot of sense. And I believe those things. But I don't think like everyone in government's bad. I just think they're mostly stupid. And they just do whatever's best for them at that moment. Nancy Pelosi excluded. She's a complete piece of shit thief. But most of these politicians, they probably have. I think they wake up in the morning with thinking they're doing the best for the uneducated public, for all the denizens of idiots out there. We're doing the best we can. They just don't understand how Washington works. It's not so easy. You got to make deals. You got to make concessions. Anyway. Okay. If we bought 5 NFTs to get to year, does Brandon take care of that automatically? Yes, but you can also send him an email. Anthony, send him an email. Say, hey man, tack on my year, bro. Give me my free year, bro. Let's see. Well, hello, late or not. Okay. Yeah, glad I couldn't make it to the bank yesterday. That's funny. Yeah, nobody. Ethereum's just, oh man, those guys really grind my gears, man. The arrogance of those dicks, man. And it's even starting to kind of, I guess I'd like to probably choke out Vitalik and just bounce his fat ass head off the ground a few times and tell him to fucking wake up and stop being rich for a second and think about all the people that you're sticking it to. Like, get off your fucking circuit of talking and conferences and bullshit and luncheons and go fix this piece of shit that you've created. Like, he's such a dick, man. Or go throw your weight behind another project, because he's just sticking it to regular people. It's very frustrating. Anyway, let's see. Found treasures. I'm following uses for DHW. Okay. I'm confused on DCA and 10x take 20. If put profit in USDC, how do you DCA? I think you got all those maybe out of order. So when you're investing, okay, so everybody that's here, there's 180 people. What is dollar cost averaging? In your own words, 10 words or less. What is dollar cost averaging? So when you're treasures, when you're dollar cost averaging, that's on the way into the asset. When you're investing, if I bought 10 tokens at $1 and I bought 10 tokens at $2, my dollar cost average is of the 20 tokens is $1.50. Does that make sense? You add them all up, you divide by the total number of tokens. That's your price. If the token starts to move and it gets to a point where it is 10 times your original investment. I mean, obviously, if you keep investing in something, sometimes it just kind of keeps moving. But if you get to 10 times your original investment, you should take, this is my rule, you take 20% off the table. It guarantees you a 200% win, right? Your original money and another 100%. You got a guaranteed win, and then you're on a lot of house money, right? That's the key. I put my profits back in USDC until I find a place that I would rather deploy them, but I'm not going to just put them right back into the same project. That just doesn't make sense to me. If you put it right back in the market, you're never going to get out. You're always going to be stuck. And then when the market goes down, your entire net worth goes down. And when it goes up, it goes up. So you're just going to be waiting for years and years and years. I don't like that strategy. I don't like it so much. So you have to have some exits. You don't have to do 10x take 20, but you have to figure out some way to exit some of your wins in a meaningful way to change your life. Otherwise, you're not doing anything. You're not getting anywhere. You buy the same amount. You mean quantity or the amount of money? Like, do you buy the same 10 coins or do you buy $10 of coins? You don't have to answer that. That's just kind of like a question to get more precise about your answer. So, dollar cost averaging should be the way that you enter every position. If you think about it, you're kind of dollar cost averaging. If you go 10x, take 20, you get a 10x return, you take 20% off the table. You get a 2x. After that, you take 10% off the table. If you're doing that on a regular basis, think about it. That's dollar cost averaging your way out. So dollar cost in, dollar cost out. You said last week you not put profits back in crypto. Yes, I think we've covered this. You should, if you have house money, that could go in crypto. But if you have your original investment comes back, I mean, you put it where it's going to do the most good, but you don't know the future. So holding it in USDC, for me, I just park it over at Coinbase. What do I get over there? 5.1%. It's pretty good. Just to sit there. I know a few people that get, somewhere around there in money markets and stuff like that, but now banks got it. So yeah, Fetch is looking like a good place to reinvest. I don't know. I mean, I don't know. I'm not going to make recommendations, but if we look at it, people are, right now, everybody's like, yeah, this is awesome right now. But again, you guys are getting kind of recency bias. Year to date, there wasn't anybody here saying now's a good time to buy Fetch. Nobody, not one damn person. It just languished and languished. Wah, 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 wah. Nothing. Right? This isn't even that long ago. You go back 12 months. Let's see. Okay. I don't remember anybody here saying Fetch looks like a good reinvestment. Nobody. And then it starts to run, and now it's a good reinvestment. But that's very near term. Look, that's the last, not even 30 days. It's the last like 10 days. 10 days. That is, my friends, that is recency bias. Let's see. Hypercycle has been performing really well lately. Well, let's go take a look. That too is recency bias. Let's see. Bum, bum, bum. Here, let's go to this one. Okay. 30-day. We're up from 59 cents and kind of languishing. 90-day. Oh. Doesn't look quite as exciting. 12-month. Looks like we're in a trough. So, I mean, I guess if you say lately and you're referring to the last 12 days, yes. I think there's a couple of things going on in people's heads. I mean, a lot of people are looking at this kind of bullish phase that we're in, this bull market, and they're like, okay, how can I make tons and tons of money? I have like someone message me like, hey, how do I make, $1 million out of this? How much would it take to make $1 million? Like, no, well, one, no one knows the future, but two, like, we want to make sure we're not injecting a little bit of entitlement and kind of like the universe owes me bias. On what fucking planet, in what eon, over what length of millennia would anyone think that 300% a year is kind of a low number? Like, oh, I was thinking it would be better. What? Like, what world do you guys live in? Go look at the entire, go look at repo. People would kill their own families to get 5.5% on their money. And we're here in a market where, yes, various assets can go crazy, but you can't expect that. You can't expect 300%. You can't expect, I had somebody who works at an investment firm who was like, I just want to 10x my money a few times. I was like, shut the fuck up. That's so stupid. Even just saying that sounds stupid. I just want to 10x my money. Oh, really? You just want 1,000% a few times? Just a quick 1,000%? Get the fuck out of here. Like, what's wrong with people? Like, that's like beyond entitlement. It's just like, it's perverse. You can't expect those kind of things. What you expect to do is you expect to do a fair amount of research. Who here, after yesterday, went and read their white papers? Like probably 2 people. And don't say you did if you didn't, because if I pull that thing out and start asking questions, you don't have answers, you're going to look like a schmuck. Yeah, a lot of people have unreal expectations. It doesn't mean that some of them don't get met, but you can't count on those things. You can't count on them. That's ridiculous. That's like, I just want to win a lottery ticket. So, I don't know, man. Oh, you downloaded it. Well, hey, listen, downloading that's the first step. That's good. You guys got to read the white papers, man. Okay, you did it with GPT. That's fine. Yeah. I mean, I would read it. It's 8 pages. It's 8 pages. I would read it one time, just the way it is. And then I would go through it with ChatGPT and Cliff Note it and things like that. And then you need to read the Ethereum white paper because you need to know where smart contracts started. That's important too. And the reason is, I think that a lot of people may be missing kind of a fundamental understanding of where the whole crypto space is, it starts with those two assets. You need to understand Bitcoin. I mean, you need to understand it to be able to explain it. You need to be able to explain it to anybody. If you can't explain how Bitcoin works, man, sell all your shit and get the fuck out of this market. Seriously. Like, what are you doing? Just go park your money with Roth or go to get a Vanguard fund or something like that, because you won't have any clue what's going on. You will just be in the weeds all the time. And that's not what you want with your money. Remember, you guys all traded hours of your life for currency units. Most of you, maybe some trust fund babies, but most of you traded time, like time that you will never get back, for currency units. And then you may or may not have punted them into the crypto space. Why on earth would you punt them into a space where you don't even know you don't even know how the very first one works? The first one of these tens of thousands of digital assets, most of them bullshit. You know, does that sound reasonable? Like, would you let your friends do that? No, you would say your friends were idiots. If you had a friend who invested a bunch of money in some random shit and then they told you about it, you're like, well, what does it do? He's like, I don't know. Okay, well, what do they sell? I'm not sure. Okay, how does it work? Well, beats me. Right, but you put half of your net worth in it? Yeah. Going to moon. We're going to moon with this thing that I don't know anything about. Oh, gosh. You got to be able to explain it to grandma. That's why we joke about that. Because if you can't explain it, you don't know it well enough to own it. If there's any of these assets that you don't basically know how they work, you should not own them. You're just gambling. You realize that, right? You're gambling. If you don't know what you own, just gambling, following the crowd, which is cool. It's not a strategy. I mean, it's a strategy. It's a failing strategy. I read it enough for the whole group. I don't think you did, Howard. I don't think we learn by like osmosis and transference, like sitting in a circle. Let's see. Okay, I read white papers. I understand. Not good at explaining. Yeah, you don't have to explain it. You only need to be able to explain it in a simple way, right? Like, how do you explain consensus? Like, okay, well, a community agreeing on what constitutes a chunk of data. Sometimes it's a block, like in a blockchain. Sometimes it's not. Right? Sometimes it's a little bitty packet of data. Depends. Are you on a directed acyclic graph structure, like a gossip protocol, or on some other? But consensus. We get consensus. Hey, we got to agree. We have to find some way to agree on what actually is the data. Like, what's the pile of information that we're going to send? Then we got to send the information. Then we have to validate the information. So make it, send it, validate it. That's pretty much all of crypto transactions, right? The tricky bits are how that first step is determined, how the propagation is determined, and how the validation is determined. But make it, send it, validate it. That's all of crypto. Matter of fact, write it down in the chat. Make it, send it, validate it. There you go. With that in mind, when you read that Bitcoin white paper, it makes a lot more sense. Then block production makes sense. Then taking a bunch of disordered transactions and ordering them from the meme pool, and then going after the zero nonce, it all starts to make sense. Make it, send it, validate it. And consensus is in the make it step. We got to determine what that pile of data is that we're about to push out. We determine what it is. We push it out, propagate it to the network by some mechanism, and then the network validates it by some other system. These are all game theory systems, right? Because you have to incentivize everyone's participation. You have to ensure that Byzantine actors, bad guys, can't pervert the network, get a hold of it, thwart your efforts. So the next thing I want you to write is Byzantine is bad guys. Byzantine bad. Byzantine generals, I don't trust them. They're bad. The cool thing about Bitcoin is unless you get control of about 34% of the network, I know everyone says 51% attack. There's ways around that too. It's about 34%. And if there's bad actors of greater than 34%, you can pervert the network. You can pervert the outcomes. You can determine the outcomes. You can run longest chain attacks. You can do all sorts of stuff. You can create your own chain. You can fork. All sorts of cool things. Byzantine is muy malo. That's right. But the thing that Bitcoin's really good about is doing transactions with Byzantine actors. Meaning, as long as 34% or greater of the network is not perverted to bad guys, Byzantine generals, Byzantines, then you're okay. You can do transactions, and there's transaction finality, and you can rest assured that if that money's in your account, it stays in the account. The smaller the network, the higher the likelihood that it can be perverted or attacked. This is because it's easier, because it's less financially burdensome for an attacker, right? Think about Bitcoin. I don't know what the number is right now. I think it was at one time, it was over $1 billion every 10 minutes is what it would take. $1 billion per 10 minutes that you'd have to light on fire to have the compute power to pervert Bitcoin. It's probably much higher than that now. But and also you would realize that, wait a minute, if I do spend all of this money to hurt Bitcoin, kind of what's in it for me? I mean, Bitcoin's not going away. Sure, there'd be some, reputation destruction there, and people would be scared, but Bitcoin's been knocked to zero, not zero, but knocked down to pennies many times, and no one cared. People just get behind it because it too is kind of a weird religion. And you don't get in front of a religion. You get out of the way. So, and also I don't think it's that simple either. I mean, just that's a whole other thing, but that's a whole other discussion for another time. With quantum computers, one, we're nowhere close, and two, they are prohibitively expensive. Also, I think it would probably be cheaper to attack Bitcoin than to have a functional, 500 to 1,000 qubit quantum computer running. Like, the cool thing. Oh, by the way, little side note: the Hypercycle team is working with some quantum computing, quantum mechanical computing teams at building like some kind of cross functionality. There's all sorts of cool stuff that are developing on the quantum computing / hypercycle side. I don't know if it's for quantum computing based proofs, but as the weeks go on, we'll kind of learn more about that. So it's pretty cool. No, why would it be 60? First of all, Donna, the original, well, if you own, okay, go simple. And you're going to have to research this because I'm not going to go into it right now, but I'll give you the basics. And that's, one, most of you have heard of the 51% attack in Bitcoin. Have you not? Anyone not familiar with what a 51% attack is? I mean, it's easy. It's worth a Google. If more than half the network is under someone else's control, then they can put forth their version of the blockchain instead of yours. And that's problematic, but it's not actually 51%. There's a lot of game theory study, systems study that actually just over a third is all it takes. Because Byzantine actors can pervert other non-Byzantine actors into thinking that they're correct. So they would pervert about a third of the network. This is the dumb, easy, sloppy explanation. And so a 34% attack, I think, is the actual real number. Computer science game theory number. But 51% attacks, I'm sure everybody's heard about that. Oh, the 51% attack, longest chain attack. Anyway, it's a lot to it, but it won't matter until you read the Bitcoin white paper. I'm just talking shit because none of you guys will understand anything that I'm talking about. ETFs, right? No. The 51% attack, it's not ownership. It has nothing to do with ownership. It's block production. It's determining it's consensus. So it's like when a network is forming, remember, make it, send it, validate it. The make it part, make that pile of data, and then someone has to agree on it. The consensus mechanism, proof of work, proof of liveness, proof of stake, whatever, proof of ... That's what determines that chunk of data, that pile of data, the bag of data, whatever you want to visualize it, a block in Bitcoin terms. So at that consensus stage, that's where perversion can occur, right? That's where you have all these nodes that are all, think of it like voting, a bunch of people, and there's a group, a coalition, a cabal, a group of lobbyists. They're all like, hey, listen, in the meeting, you're going to vote green. All right, you're going to vote number 4, vote green. On the 4th one, green. And you're in there, and all of a sudden they vote green, and other people see them vote green, so they vote green. They're like, oh, green. I guess green's the answer. You're like, no, green, what? Green's not, there's not even. So on the mining side, the miners, that's where these perversions can occur. It is, and just in general, it's in the beginning stages of consensus. Consensus can get perverted, and you can have a dishonest majority. We don't want that. We don't want dishonest majorities. It's bullshit. All right, God, Ethereum, what a dick punch. It was 3,800. Okay, let's switch gears. We are going to talk about Bitcoin. We're going to talk about the halving a little bit. Okay. So the halving, okay, implies a 50% reduction in miner rewards. Anybody here in the chat, please. What is the amount of Bitcoin per day that miners receive on the average right now? How many Bitcoin a day are unearthed as we approach that 21 million total cap? Anyone? Bueller? Let me keep reading. 900. Nailed it. Well done, Joe. Well done. What? 195? Neil, go back to sleep, buddy, or get more coffee. Come on, bro. 4. You guys. 800. No, it's 900. Jesus. 9 per miner. No. What kind of drugs are you on, Howard? It's 900. Okay. It started. Okay. Here's another quiz. Dear God, this is where I'm going to find out if you guys have been asleep at the wheel. Well, in the original first cycle, the first 4 years of Bitcoin, what was the block reward per block? How many Bitcoin per block? It's not 9 per miner, Howard. If I set up a mining rig and plug it in, I don't get 9 Bitcoin a day. You're saying there's only 100 miners? Dude, stop. It's 900 a day. Yes, 21 million tokens is the total tokens. Joe, dear God, thank you for Joe. Joe, without you, I was going to go headbutt the pavement. No, stop answering. You guys stop answering. Joe nailed it. This is the answer. Joe, 50 Bitcoin per block was the original. No, it doesn't depend how good you are. 900 is the total amount of Bitcoin per day. It doesn't matter if you're the greatest or the worst. 900 is the total amount per day right now of Bitcoin that is mined. Listen to the question. I know you're just grinding my gears, Howard, so I forgive you. Okay, it was originally 50, as Joe stated. That's correct. And then 4 years later, we had the first halving. The first halving. What happened? They said, okay, per block now, 25. Okay, so you go 2009, you go forward. Okay, 2009, 10, 11, 12, 13, first halving, 14, 15, second halving. So we went from 50 to 25, 25 to 12 and a half, The last halving, 12.5 to 6.25. That's where we're at right now. And 6.25 per block, per 10-minute block, gives you about 900 a day. Okay. Well, in a few days, say a few days, a few weeks, we go to another halving where they cut the block reward, and that is the reward per block. Remember, each block, each 10-minute block of disordered transactions turn into ordered transactions. We compete by running software against each other that's mostly redundant, and whoever wins gets the block reward. And their version of the last 10 minutes gets propagated out to the community. It gets validated, and off you go. Okay? Yes. And now we're going to go to 3.125. Why this is interesting is because, well, a lot of miners that are barely like right on the edge, maybe they didn't upgrade their equipment or whatever, they're right on the edge, they're no longer going to be profitable. So what happens is, as more mining power, let's say a bunch of new mining capacity, compute power, hashing power comes into this ecosystem, every 2 weeks, the Bitcoin network readjusts its difficulty to maintain that 10-minute block time. That's why they're mostly 10 minutes, but not always, right? Seems like that would never get to zero, but it does. It halves and halves and halves, and in 2140, it's zero. It stops, and the last little fraction of the 21 millionth Bitcoin is exposed. It's pretty cool. Miners already sell their Bitcoin to survive. Myers. Well, maybe the Myers, they might live down the street from you, but miners already sell their Bitcoin. Mining is a business. They're not investing in Bitcoin. They're just mining, and they hope that the price of Bitcoin goes up while they're mining on equipment before an upgrade cycle, because then the money they spent on their equipment is fractionally much, much less than the price increase in Bitcoin, and they get the spread. But if they're mining a Bitcoin for 60,000 and 65,000, great. But if their block reward, like the block reward right now, do some math. Anyone? Joe, you're nailing it. What is 6.25 times 65,000? It's almost 400,000, right? Am I right? So that's going to get cut to half. So the price of Bitcoin doesn't just double. And again, there's no reason the price of Bitcoin doesn't have to do anything. But if the price of Bitcoin doesn't double, then all the miners right now that are barely on the edge are going to get whacked. They're going to have to unplug. So let me read this in that context. The Bitcoin halving implies a 50% reduction in miner rewards, and this creates a crucial moment for them in kind of the Bitcoin ecosystem. Fidelity Digital Assets, they have some people there. They warn miners about the need to be proactive. Like, these miners need Fidelity's. Hey, Fidelity's telling these people that have been mining for years, hey, we've recently determined that you need to be proactive in maintaining your position. These miners are like, shut up, you corporate douchebags. None of you assholes even knows how to plug in a computer. Anyway, they're like, yeah, thanks, genius. Miners must adapt to the immediate reduction in income and constantly seek ways to improve their hash rate and improve the efficiency. There's going to be a lot of attempts to upgrade to newer equipment, and those that have newer equipment or that have lower electrical input costs are going to have they'll be able to stay around. But this having an event that occurs approximately every 4 years, it is crucial for miners of Bitcoin. It involves a 50% reduction in the rewards that miners receive for validating transactions and securing the Bitcoin network. While Bitcoin holders often greet the halving with optimism, expecting an increase in the currency's value, miners face a bunch of challenges because their equipment now, their return is only half, right? You're about to see your income get cut in half. And that is not so easy. And yeah, I think a lot of miners will go into AI compute. It's going to be very interesting. Let's see. Kiro says 688 million BTC inflow into ETFs. I don't see how it stops climbing. Tim Buckley. Yeah, but I don't think that's why Tim Buckley resigned from Vanguard. I really don't think the Bitcoin thing was what did it. I think that he made a series of bad decisions, or at least publicly facing bad decisions. That was just one more. It's not any. No one's going to fire him for having missed the early days of the Bitcoin ETF. That's not enough. That's not enough to be fireable. But if he disenfranchised or if he just pissed off a lot of people, well, maybe, right? Like maybe. So yeah, I mean, listen, the miners are a crucial part of the Bitcoin ecosystem. When they go through these routine upgrade cycles in equipment, this is another kind of cycle. The halving, and by the way, it's not instant that the price doubles, right? It's not like you automatically made it. But anybody that was profitable mining Bitcoin at 30,000, 30 or 40,000, they're going to stick around. It was the people that needed the price. It's people that are newer to the mining community. Those are the people that are going to get blown up because they're like, yeah. And then the halving comes. They're like, ah, shit. They just get ripped in half. Well, Vanguard looked pretty stupid. But Vanguard is big. It's really just BlackRock and Vanguard, and they freaking own everything. I mean, everything. And so those guys, my guess is they wouldn't really directly do a mea culpa, but what they would do is they would say, hey, look, we don't agree. They can do the Jamie Dimon thing. We don't agree with the Bitcoin and cryptocurrencies. However, we do what is in the best interest of our clients, and we listen to their concerns. And people said they wanted exposure, so we're going to let them get exposure through one of these other products, and they'll get behind one of the other ETFs until they can launch their own without having egg on their face. They looked pretty stupid to us, but remember, we're a small group. The crypto community is still pretty small. And so Vanguard looked dumb, but only to like a handful of us. No one else knows. No one else is like, hey, that guy's a real dick. The Vanguard doesn't have ETF. No one, grandma doesn't give a shit about Bitcoin ETFs. She just wants to find her denture cream. So anyway, I would show you the cat again, but I don't know where that little rapscallion has gone. So I'm going to go try to figure out what he's destroyed since I've been here. I want you guys to earn your returns. I want you to earn it by research and understanding these things and doing the homework. And if you don't, you're just gambling. And I don't want anybody here to be, subsistent, to be, just throwing money in different directions and just hoping like, well, everybody else is doing it, I'm doing it. No, you need to understand this stuff. You need to read the Bitcoin white paper. You need to read the Ethereum white paper. Will you understand everything about it? No, mostly you won't, but you'll understand a lot, and you'll start to form in your mind, make it, send it, validate it. What does that mean? What are smart contracts exactly? What was Solidity? What are its flaws? What is the Ethereum fee paradox? Why is this piece of shit never going to be fixed? And then these things they'll start to click. It doesn't mean you're going to all of a sudden start making money, but you want to understand the things that you own. Then when you get weird news, for instance, those people that panic sold Fetch. Oh, I'm out because Tika and some other dickhead said sell. Some idiots, Benjamin Cohen and some other dumbasses on Twitter, sell because of the news. You're like, no, this isn't even real news. Yeah, like make sure that the news that you FOMO off of is real news, not like fake news. And by the way, FUD, it means fear, uncertainty, and doubt. It doesn't mean fake. Fear, uncertainty, and doubt are probably fair emotions. But fear is different than uncertainty and doubt. You should have uncertainty and doubt about every project you look at, and you should constantly be proving to yourself why you should own these investments. Fear has no place in these markets. If you have fear, you shouldn't be investing because you don't have the risk aversion. You don't have the tolerance for risk that's necessary. You're too risk averse to be investing. That makes sense? So think about where you are on that curve. And at the very end of the curve is gambler or like tightrope walker. And at the short end of the curve is people that invest in bonds and don't have any exposure to any other assets because they trust nothing. And there's a lot of fake news. Okay. But remember, the F in FUD doesn't mean fake. So, oh, that's FUD. Don't use it that way. You're sounding stupid. I'm not saying anyone is, but don't be like, oh, that's FUD. If it's fake news, it's fake. Say it's fake. That's bullshit. That is not real. That is fake. Fear, that's going to come up. That's going to pop up every now and then. Uncertainty and doubt. Shit, I have uncertainty and doubt about every single thing I own. Every one of them. To some degree. Otherwise, I'm not a human. You just got to make sure that the score is worth the stretch. Remember, in Heat, that great moment, the seminal moment at the cafe. Score worth the stretch. Anyway, do a little bit of research so you understand. Got to understand what you own. Anyway, on that note, we'll see you tomorrow. Probably not Brandon. Probably just me again. I'll do some more. I'll find something else to cuss about. I'm done cussing about the Ethereum assholes, arrogant pricks. And on that note, don't worry, fees will never go down. That's what he said. We're not trying to make it cheaper. Yeah, no shit, genius. We've seen that over the last 5 years, you dicks. Anyway, stay in school. Don't do drugs. Don't do anything my poor, insolvent, drunk, strung out on meth grandmother or Rubester, who's not stupid. He's just fearful and uncertain. Wouldn't do. And on that note, I bid you a fond adieu.
Do you trust your crypto assets to centralized exchanges that actively sell your private information and front-run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low-liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.